Plus, today we will discuss about the home financing product in Islamic banking and entities. This product is quietly known to the public because the home is the basic needs of the human being. And because if you have a family, you have to provide the house to your family, right? So in this topic, we will discuss about the several contracts that are used by Islamic banking entities, and especially in Oman, that many Islamic banks they are doing home financing based on the one contract, which is diminished musharaka. But other than that contract, we will discuss also the other contract that used by Islamic banking, right? So in this topic, before we come to discuss about the Islamic banking product in home financing, we will discuss also the conventional home finance, which you have to understand in order to see the difference between the conventional and Islamic. We will discuss also the Bai' Bithaman Ajil home financing, which is before is widely used by Islamic banking in Malaysia. And we will see also the critical assessment of Sharia compliance in this kind of the product. We will discuss about the some fiqh issues which related to home financing product in Islamic banks. We will touch a little bit about the previous case, which this we have to take attention, because this case, for me it's like give a bad image to the Islamic banking industry at that time, where this case is brought to the court, the case between Affin Bank and Zulkifli, where they are using BBA at the time, which actually this is kind of bail-in actually. And also we will discuss about the floating rate in financing that can be used in home financing. And lastly, we will discuss about some alternative products that can be used in home financing. Right. So before we discuss about the Islamic banking product, we have to understand firstly conventional banking product in home financing. The way how the conventional banking doing the home financing, actually it is kind of a lending and borrowing between the customer and the bank. So what they will do, the first one is the customer will make a deal with the developer by paying 10% down payment to the developer. By paying this 10%, the customer will receive some kind of certificate that the customer will actually buy this house, right? And then after having this kind of the certificate that the customer already paid 10%, the customer will come to the conventional bank after agreed fulfilling all terms and conditions. So the customer and the conventional bank will sign loan agreement, right? The loan agreement is contain 90% remaining the price of the house. Let's say, for example, the price of the house is 100,000. The customer already paid 10,000 to the developer. Remaining 90,000 will be loan from the conventional bank. So from that, agreement, the customer will receive 90,000 from the conventional bank. The bank will charge some kind of percentage of interest, and then after the money being transferred to the customer or to the developer, the customer will come to the developer that he will pay the remaining amount, which is 90,000. Then the customer will fully own the house, right? So the loan contract is actually done between the customer and the bank, which is prohibited from the Sharia point of view. right? Because the sale and purchase agreement is done between the customer and developer, right? That is the conventional bank. So in order to make you have full picture of the conventional, as usual, I give you uh, the diagram, right? So let's say this is conventional bank, what we call it CV. Say for example this is customer. Let's say this is Ryan, right? When Ryan wants to have home loan from a conventional bank, what does Ryan do? He will deal first with the developer, right? So this is the first stage. What he will do? He will pay 10% of the price. Let's say, for example, the house price is 100K, right? So he'll pay 10K here in order to get the certificate, right? He will give the certificate of of down payment that the customer will pay this kind of the house, right? After that, the Ryan will approach any conventional bank, right? So in this case, after the customer fulfilling the term conditions that required by a conventional bank will provide, right, loan here loan agreement, which is 90,000. He will pay on monthly. Paid in, for example, 15 years in installment. Right? So the loan agreement will be here between Ryan and the conventional bank. After receiving 90,000, Ryan will pay the remaining amount, right, to the developer. Pay 90K, right? Then the developer will give full a certificate of ownership, all right, to Ryan. Certificate of ownership, right? So now Ryan is the owner of the house. This is the way how the structure of conventional bank, right? So the relationship between the customer and conventional bank is lender and borrower. Now let's discuss about Bitham and Arjil. That's the contract that used by Islamic bank, in Malaysia. First, the buy Bitham and Arjil is kind of deferred payment sales. It is kind of the normal sale contract that fulfilling essential condition of for sale. Like for example, SICO, there is an offer and acceptance, clear and consensus. Should be there is a aqidan, contracting parties, where there is an offer and offeree, and then the offer and offeree should be legal authority to the contract, like owner and possession of assets. The assets should be owned by the seller, for example. If the buyer should be like buyer and the seller, it should be legal representation. If it is children, it should be represented by his guardians and so on. And the subject matter, it should be also the something has a value and strengthenable and legal. So it cannot be we cannot sell something which is not legal and not something has no value on it. Like for example, maybe it is kind of overvalue of the assets. Let's say for example, you ask any selling, like for example, this pen with 10,000 Oman Riyal. It cannot, because the price of this pen maybe around maximum is 500 or 600 Baiksa, less than 1 Riyal, right? So how in this BBA is different with the Murabaha? Normally, Bai' Bitham and Aljis is actually is a long-term Murabaha contract, sell with different price. But in Murabaha, it is a short-term. So that's why in order to differentiate between BBA and Murabaha, actually in BBA's final price should be contractual agreed and known to both parties, and Murabaha is sell and purchase based on the trust, which is Aqdul Amana, and the payment of the price is deferred, the same like Murabaha can be deferred, but it can be also in an installment, the same like a BBA, and time on board a payment should be ascertained, and no need to state a cost price and amount of markup in BBA, but in Murabaha you have to state, right, how much you purchase, for example, this house from the developer and how much you want to sell it to the customer. And as I told you that BBA is long-term financing, well, in Murabaha is short-term financing. Alright, so this is the differences between the BBA and Bai' Bithaman Ajil and Murabaha. Now, how the BBA modus operandi in Malaysia? Actually, BBA modus operandi in Malaysia is quietly the same like what the conventional practice. What is different is that on the, for example, as we discuss here, right? Here Ryan will go to developer paying 10%, right? Okay. After having this kind of 10% down payment certificate and having such a kind of legal ownership of the underlying asset, then Ryan will approach the bank. The bank, Ryan will sell this after fulfilling all the term condition. Ryan will sell, here, will sell this kind of the underlying assets to the bank, which the remaining value is 90,000, right? He will sell at 90,000, right? The bank will pay cash here, 90,000 cash, right? And then after having the ownership of this kind of underlying assets, right? The bank here, what he will do, he will sell back the underlying asset here, sell back, but at a higher price. Let's say, for example, the price is become 100k, paid, for example, 15 years, right? So the difference here is that there is a sale and buyback agreement between the Islamic Bank and Ryan. Say, for example, here we change to Islamic Bank. So the whole process is the same, except on the loan agreement they change into the sell and buyback agreement, where the customer sell at 90,000 at cash, but the bank will sell the property or the house at the 100,000 higher than the cash price, right? So this modus operandi of BBA is the same like Bail-Ina. So the contract that they are using, yes, it is by Bithaman Adil, but the whole process, the contract between customer and bank, actually Islamic Bank, actually is like Bail-Ina, because there is a selling at the lower price from the customer to bank, and the bank will sell back at the higher price. So actually this is an agreement made between the bank and the customer, whereby the customer agrees to assign all his right and interest over the property to the bank as security for financing granted, right? The customer normally he will give a security deposit. Charge document will be used when the issued document of title has been issued, while deeds of assignment is used when the IDT is yet to be issued, right? This is like legal ownership when the customer pay to the developer. So issues and controversy here in Bai' Bithaman Adil. First, of course, as I mentioned earlier, this is kind of Bail-Ina. The termination of profit sometimes it can be deferred or can be spot, right? So that's why it is sometimes against the IOV Sharia standard also. When you are selling something, you have to say on the spot. For example, if it is the price of the house is 100,000, it should be 100,000. It cannot be a change, for example, in the after 5 years, for example, if the financing is at 15 years. So beneficial ownership. The issue is sometimes can the customer sell the house when he is only having a beneficial ownership or legal ownership only? There is no title, ownership there. Some scholars saying that if they have a beneficial ownership, they can do sell an agreement. But some saying that if you have a beneficial ownership, you cannot sell that underlying assets, because you have to have a full title ownership on that kind of the assets, right? The absence of what there, of course, when there is a buy and sell agreement at maybe 5 minutes, so there is no what element there that involved in this kind of transaction. In case of delay, also the customer has to pay some amount of late payment charges, and also if in case of early settlement, also the bank sometimes should give rebate, but it is some kind of discretionary, right? So the bank will delinquent is part of purchase price in order to give some kind of hiba to the customer. Now the issue sometimes also coming for the house under constructions, whereby when the house is not yet ready, the bank and customer already make some kind of sale and purchase agreement where the house still not yet exists, right? So liability is transferred to the customer. Of course, there is kind of issue as well. The bank is free from risk, as we mentioned before. It should be IWAD, but there is no IWAD in this case. The terminology used, loan, sale, customer, borrower, financial, and lender, is sometimes like manipulating the wording only, whereby the structure itself is quietly the same like conventional, and also sometimes people are questioning, because the Islamic bank is not property trader. How can the Islamic bank sell property to the customer, right? So this is one of the issue, but for not become a real property trader is not an issue from the Sharia point of view, right? Unless the bank should buy itself from the buy the property from the developer directly, right? But in this case, in BBA, the customer is purchasing from the developer, not the bank itself. The second point is profit determinations. So banks make profit by charging a higher price deferred sale price at which it bought the property. Mathematical formula is to calculate installment payment based on the constant rate of return is identical that use conventional amortized fixed rate home loans. So this is kind of issues that always coming up to the Islamic banking industry from the academia, especially from the public. But for you to understand the formula or mathematical things in Islamic or conventional, it should be the same, right? Because we cannot, because this kind of the formula is kind of like a market price. So there is a time where majority of international practitioners are having meeting together in order to design international Islamic benchmark rate. But this rate cannot be applicable, because the rate from one jurisdiction is different to another jurisdiction, right? So it is difficult to implement. So that's why before we are selling something, we have to see the market conditions or the market rate at that point in time. So that's why if you bring the two calculators, we cannot differentiate between conventional calculator and Islamic calculator, right? The conventional calculator and Islamic is the same. 2 plus 2 is equal to 4. Either it is conventional or it is Islamic, right? So, but the point is that to differentiate between the conventional and Islamic, the formula how they are doing the calculating the interest. While in Islamic, if the interest in conventional interest can be compounded if there is a late payment or something. But in Islamic, you cannot compound the profit, right? When you agree with the profit, it is fixed from the beginning of the contract until the end of the maturity. Right? The pronounced correlation between interbank interest rate and Islamic interbank profit rate. Yes, there is correlations. Well, you're having the same formula in Islamic bank and conventional bank. If you see the correlation between the conventional and Islamic, anywhere you are, they are actually moving in the same directions, right? Like in Oman, we are having also the same correlations between the conventional and Islamic, because in Islamic banking should sell something which is equal to the market. Otherwise, people try to reject this kind of Islamic banking product. The issue of beneficial ownership. So beneficial owner interest indicates a right of substantial enjoyment or equitable interest as opposed to mere nominal ownership or legal interest. For instance, if A holds land in trust of B, A is said to be the legal owner as the land is registered in his name, while B is said to have beneficial equitable interest or to be the beneficiary. As such, the difference between legal and registered owner and beneficial equitable interest is where the former has got his name registered in the issue of documents and by relevant authorities, while the latter is not. The transfer of ownership is on the way. It can take some time, especially when one buy house from developer which is under construction. Like say for example, if we are purchasing price under constructions, in the Ministry of Housing we are not yet registered our name. It should be there is a process because the house is set. There is a process of, for example, 12 to 14 months, 1 or 2 years, for example. But yes, if the beneficial owner wants to use the asset, it should be get the permission from the title owner. Purchase agreement transfer liability to customer. For securing the payments of sale price, the customer shall execute a registerable charge in favor of the bank. The customer shall take the takaful mortgage plan as well as a fire takaful amount accepted by the bank. The customer shall identify the banks. Again, losses may be brought at any time by the vendor or any party or parties. The customer to pay all quit rents, rates, taxes, assessment, and other charges imposed to be imposed by the government or other competent authorities like Ministry of Housing. For example, in Oman, they are charging if there is a transfer of ownership in the underlying property, it should be paid 3%. This is like in other country where there are many components, like for example stamp duties, taxes, fares, fees, expenses, and everything. And this should be borne by the customer. For sale agreement is bank free from risk, where the customer is to pay security deposit which shall be retained by the bank for the due observance by the customer, and the customer authorize the bank to set off or utilize the same for the purpose of setting any installment due and payable. Say for example, the customer delay in payment, so the bank has the authority to deduct from that security deposit. The bank is entitled to other type of securities or to be the lien holder to any property belongs to the customer in order to secure payment. In the event of property at any time becomes subject to acquisition by the government, the bank shall be entitled at the expenses and the customers to engage advisors and agents for the said purpose. The customer shall duly observe and perform all terms, conditions, covenants, and stipulation to be performed by the customer under a sale and purchase agreement. So the customer is responsible for all related matters to the underlying property. That's why we can say that a bank is free from risk from this kind of BBA contract. So the customer shall indemnify the bank against any losses, claims, demands, action, expenses. Let's say, for example, if the customer cancel the contract, so if anything related to that contract, the customer shall borne all the related expenses. Upon demand, the customer shall promptly pay the bank all amounts of paid by the banks that derive from the customers breaching any provisions of sell and purchase agreement. So that's why, for example, if the cost of purchasing property, for example, is 12,000, while the customer only pay 10% security deposit, for example 10,000, remaining 2,000 the customer shall pay to the bank, right? The bank, not being the developer otherwise, shall not liable any claim in respect of any defects. So that's why the customer in this case should really care which house he purchased, because once he decided to purchase that kind of the house, he will bear all responsibles for that the house. So however, the customer can make any claims against a vendor or proprietor. The bank has the right to combine a set of accounts belonging to the customer without his notice to satisfy the customer's liability to the bank. In case of the customers, for example, let's say, for example, the customer delay in payment. The bank will not notify the customer when he deduct his security deposit in order to pay due, right? If it is, let's say, for example, if it is the house under construction, let's say that there is a defect of the house under construction, this is responsible for the customer, because the one who deal as the agent of the bank, the customer shall check the work that's done by constructor. If there is the defect of change of any materials, that's the customer's responsibility. Right, now the issue is that how to deal with the late payment or default. In this case, in interest is used to penalty to compensate delay of time of value of money, whereby this late payment will belong to the bank's income, while in Islamic, if any late payment charges, it should be donated specific amount to charity, cannot be part of bank's income. So there are, and the second compensates for the loss at rate equal to bank's profit rate on the deposit on the minority point of view. Like for example, must be deliberate only investment and profit to be distributed to the depositor. Stipulate in contract, if one installment default, remaining installment become due immediately. So there is one bank, if the customer default in the car financing, he will default in home financing, but it isn't necessary. So in order to calculate late payment charges, how to differentiate between the Islamic and the conventional, whereby in Islamic the bank only calculate from the principal amount, which is not compounded, while in the conventional bank it is calculated from the principal plus the interest, right? So let's say the bank, right, the principal plus profit for in this conventional, this is Islamic, right? Let's say the monthly installment, for example, 100, here also 100, whereby 90 is a principal, 10 is right as a profit. Here 90 is a principal, 10 is 10 is the interest, right? And so in conventional bank, they will take, right, here, sorry, let's say this 1,000, this is 1,000. So in conventional bank, for example, in first month you have to pay 10, in second you have to pay 10 plus 1, 10.1, because he will calculate compounding. In Islamic, you only take 9, because only from the principal, not the profit. And the second month, you only pay also 9, not in 9.1, something like that, right? So this is to differentiate between the conventional and Islamic. So in Islamic there is compounded, no compounded. In conventional there is compounded, while the good thing is in Islamic, this amount will channel to charity, and in conventional bank is treated as bank's income. So what about the cross default? If default in car financing, also default in home financing, it is of course is allowed, but it should be mutual consent. But it can be also it's set off from the customer deposit to recover installment outstanding, based on the principle of maqasa, right? Now there is an issue if the customer wants to pay early, right? Early settlement. In Islamic bank, we can use IBRA, and the rebate must be, but this case must be voluntary and cannot free space in the beginning of the contract. If it is specified in beginning of contract, so it is the same like a conventional bank. So, that's why. But this kind of voluntary, the customer cannot force the bank to give him rebate, because this is not kind of agreed things between the customer and the bank, right? It should be voluntary. But most of Islamic bank, they are providing this kind of discretions, all right, on discretions, like say, for example, Islamic bank will give you discount, for example, 25% of the purchase price. Now, if we want to compare the rate between the conventional and Islamic, of course, if the rate are the same, of course the Islamic will be cheaper, right? Because if in the case of that payment, the bank only charge from the principal amount 1%. Now, what if there is a flexi, means there is a combination between fixed and variable, like and floating, right? This is what we call it a hybrid BBA product, which is in Oman we are not using this kind of flexi, where in every month there is a combination between fixed and floating. The contracted fixed determines selling price, but actual rate charges to the customer at variable. The difference between the actual rate charge and the selling price will be rebate on monthly basis. But this is not quite comfort to many customers, right? Let's say, for example, the flexi means like this, okay? Let's say right, so there is they are making two rate, a flexi, and for example this is fixed, for example 5 5 5 5 5, right? In the month 1, for example, the rate is become 3, so what you have to pay is installment is only 3. If here is 6, but here you have you pay only 5. Here you get rebate 2. Here you get here you are only paying 5. So for example, is 4. You have only paying 4. All right. If it is 5, you are only paying 5. Something like this, right? The flexi method. So that's why if you see the illustration floating rate in financing in the conventional and Islamic, in conventional they are following the market rate, which is quite higher if the interest rate is increased, but in Islamic you only pay less than the conventional, right? So the issues in floating rate financing, right? The like IBRA, rebate in Sharia terms, is discretionary. So moral hazard banks holding rebate, the concept of ifrat not used as intended by Sharia. So let's say the bank is not giving customer rebate, it is some kind of losses also to the customer, because they will compare with the conventional bank, right? So it is for the customer's point of view, it is not good for them. So there is a gharar also to the customer, not knowing the real cost of the assets being financed. Banks with free hand to determine effective profit rate, given that the bank has to work with the ceiling profit rate, might add uncertainty premiums to predict effective profit rate. Right? In this case of with Thaman Adil, where the bank is not liable to inform how much the actual price. Product may appear attractive to the customer. Higher initial price may create negative sentiments toward the products. Banks hedge its exposure and undertakes minimal risk, like lack of award, for example, to just Islamic bank's profit. Now we are coming up with the issues between the Affin Bank and Zulkifli during the 2005, whereby in this case the contract between Affin Bank and Zulkifli at the time is based on Bay' with Thaman Adil, which is bail-in in nature. The contract is based on the underlying asset that's under constructions, where the property under construction at that time still not yet finished, but he already started the payment. All right, and then when there is default after 2 years and 8 months, banks sued the full selling price plus the charges amounting equal to 958,909, whereby the financing amount is only 346, which repayment in 18 years. Right? So the problem is that when the house the auctions, right? When the house is auction, the house only Zulkifli only can get is 400,000, right? So the issue is that the amount of financing claim in the default is too much higher because this claim it should be relevant after 11 years, but the bank is claimed for the default during the default is full price of the 18 years. Right? So that time the court is giving the decisions whereby reduced from the price of 958,000 to 582,000, whereby borrow under conventional home is for better off, means that the court said this kind of Islamic banking financing is the same like conventional. So that's why bank only entitled to earn profit for period of 2 years and 8 months, right? So this is the good, of course, news for the customer, but it is of course it is not good for the Islamic banking industry at that time, because in this case we are saying that the Islamic bank is the same like conventional, where the court interpretation of the earned profit implies the operation of the conventional concept of the time value of money. The true concept of Islamic deferred sales should not incorporate earning profit, which is the function of time value of money. Implementing BBA facility in this manner would imply the Islamic facility is little different from the conventional. However, it appears the conventional approach, such instant result is more justice. But the way how we see justice is not necessarily, because how we address such of predicament. So it is very difficult to Islamic bank, right? So the issue is that how we deal how to deal with default. In BBA financing amount plus for profit, late payment under default charges. In conventional, whereby you are only asking to pay interest for 2 years and 8 months only with the default charges. So this is the issue of BBA and the issue of the court decisions at the time. So what is the inherent problems of BBA? What are the alternative Islamic home financing? So there are some kind of alternative in home financing, which can be used by Islamic banks. Let's say, for example, diminishing musharaka, like ijar mawsufa bil zimma, like murabaha, like tawarruk, for example. But we will discuss this alternative for the next session. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.